The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how are you doing? Welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and checking out where the markets are at right now. So let's go ahead and pull that up and check out the S&P right now, basically flat on the day, and not a whole lot going on there. I mean, had a little run up, run back down, and some great RSI divergences set up that you could have taken advantage of. We got the NASDAQ up 8 points. We got the Dow down 24. We had the Russell up 80 cents. Gold is down $5, a little over $5 right now. And we got copper pretty flat on the day. Silver down about 0.5%. Corn is basically flat, down just a couple ticks right now. We also have soybeans, also very flat on the day. So not much happening on a lot of the markets. Looking on over at oil, even with the inventory report coming out and everything else, right now it's down about 5 cents from yesterday's settlement. We got natural gas is moving and shaking. When everything else seems to be calm, natural gas decides to move. It is up nearly 2.5%, almost 3% on the day. Euro dollar is down a mere 2 pips. However, pound dollar has decided to wake up. It is down 109. Aussie dollar at 44 pips. U.S. yen up 3. U.S. Canadian down 2. U.S. franc down 1. So very flat FX besides the Aussie and the pound dollar right there. Dollar index basically negative territory, but I mean it's negative 0.01. So basically non-existent when you put it all together. And let's go over and check out just the announcements. Of course, we know we had Obama come on last night and had his speech, you know, let's tax more, let's spend more, on and on, let's regulate more. But, you know, Rubio came back on. I thought he did a pretty decent job, you know, and just talked about, hey, get off the tax kick. You know, that's done. You've already got your tax rise. At the end of the day, there's not enough taxes to pay for all the things anybody wants to do. So there's one solution, and it's get out of the way. And if you want a lot of tax revenue, get out of the way and let companies make money, and they will pay taxes. But you raise the taxes, go to the government, doesn't really go to the people. So it comes out, and I thought one of the Rubio's things is that money's coming out of your raise. That money's coming out of you having a job when it goes to the government. It's not like the government says, oh, we're going to tax, you know, your CEO more money, we're going to tax this company more money, and then we're going to give it to you. And yeah. So the middle class is not the one getting the benefits. So let's look at the reality of that scenario. The middle class is the one paying it. I've talked about affordable health care. By the way, family of 4, you're looking at least on the medium plan, they're going to have like a bronze, a silver, a gold plan for the new health care insurance, and they'll have it for a young, middle, and older group. So if you're in the middle group, let's say, you know, you're in your 30s, 40s, married, have 2 kids, you're looking at about a little over $12,000 a year in premium that you're paying, plus another, you know, up to $12,000, you know, out of pocket on top of that. So you need to allocate about $24,000 for your insurance next year, the more affordable healthcare insurance, unless you make less than $50,000. Then it'll go down from there. So basically, if you're a middle class family making, you know, 60, 70, 80, 90, 100, then yeah, you need to go ahead and take 25% of your income and allocate it now towards healthcare insurance. And but just be ready, it's coming. I've been looking at the insurance rates on the new tables that are coming out, and it's not affordable to those who, well, aren't poor. So when it comes right down to it, and those who are poor, they just don't get it until they have to get it. Then they pay a $90 fine, and then they can get it, and then it'll cover them. So the whole system is not going to work, and it's just going to mean that everything costs more. So, but it's coming, and I mean there are benefits. There's some cool things. As a dad, I love the fact that there's absolutely no cap on how much they're covering my daughter or my son for. But as a businessman, I'm like, okay, well, that means that either they have to go bankrupt or they have to charge everybody a whole lot more money and then just issue some refunds at the end of the year. So you get to front the bill while you're waiting to see what their profit is. At the end of the year, you get some back. And of course, as a father, I talked about this before, I can't even get health care insurance for my newborn baby because of the new health care law. Now, starting in January 2014, I can. But there's not a single company, at least in the state of Texas, and I think nationwide, that will cover an individual policy for a child. So if you're self-employed, if you're the entrepreneurs that they're trying to help, you can't get coverage for your kid. Now, if you have a big group plan, you could, but you can't get coverage for a child. Like my daughter has a plan, I don't know, it's like $80 a month or something, but she's grandfathered in, but they won't cover the new kids. So without having a group plan, you can't even get health coverage for a brand new baby. And that's an effect of the new healthcare law. Had no problem before it. So there's a lot of things people just don't know what's coming, and when they do, it's going to wake up the thing. So we'll see how it all turns out and the economic impact it has. I hope it's for the better. I want our country to do well. I want it to prosper. And hopefully both parties will work together to figure out a good solution. Looking on over and seeing what's going on right now with the news. We had several reports come out last night, and I'll summarize those for you right now. So out yesterday, let's get us caught up. We had the CPI numbers, we had the pound numbers come out yesterday, caused some big movements on the pound. But that was again yesterday. Now last night, we had a little bit come out, but not a whole lot. China being on holiday, that sort of also makes it a little, weird of a week because China's on holiday for basically the week. And then this morning, Bank of England Governor King spoke. The inflation report came out on the pound. And so I'll go ahead and I'll pull a chart up on that. We'll look at that for you real quick. And that'll probably be the best way just to summarize the activity on the pound because it's been, one of the bigger movers. So figure might as well go there first and just look at, what was the impact of that report and how could you have traded it so you can take that lesson and you can apply it going forward. So I'll go here, I'll throw it on, and give me 1 second to pull it up. I'm going to put it just on regular minute bars to make it easy. And do that. And then I'll throw the deviations on here real quick. Make sure you are getting access to those deviation levels inside of our members area there. And you'll see right here. Okay. So right here what we can see is we had... chart issue. Right there at 5:45. Basically, right as that announcement comes out, right as Governor King starts coming, the inflation report gets released, the pound just starts taking a dive. And so we're right here around settlement, yesterday's, settlement price. And, I mean, it absolutely flew. So this wasn't a short movement, man. And, this would have been one of the ones. It was a high-impact report, so it was on the radar for you to trade it. And let me back up. And this thing just flew down. So, it started half a deviation, 0.7. Finally decided to pause for, 3 minutes or so at the 1 deviation level. Dropped down to half, like literally just bounced off of it. Took it about 4 or 5 minutes. Broke through that. Went on down to 2. And basically just playing at a -2 deviation, which is a 97% of expected movement is at a 2 deviation level. And this isn't standard deviation, it's implied. So it's based on implied volatility, how far the market says the market will move. The market basically says there's only a 3% chance it'll go beyond this. There's only a 0.3% chance it'll go beyond a 3rd deviation. So really, we would expect the movement to be done now on the pound dollar. So, sitting right there at that level. But, that's those high-impact reports, man. Talk about a perfect strangle setup. So, I don't know if anybody took advantage of that. I wish I would have. It was right there. I just wasn't up that early this morning. So, looking on over, we had our retail sales numbers come on out of the U.S. So, let's just check out how that impacted the market. I know there was a nice up and down move. And we'll throw that on here. And let's see. So, pull the 5-minute report up. Let's throw a couple simple things on here. And we'll get it all loaded up. And what I'll do is I'll just pull up one of my other charts that already has all this information on it. There we go. And so we had the report come out this morning. And right around 8:30 was when at 8:30 was when the core retail sales and retail sales reports came out. Those reports came out right here. And they came in at 0.2% on core retail and at 0.1% on retail, which was actually a little better than expected. However, when we look at the last number, came in at 0.3%. So they expected it to go down, and it still did go down. So it was 0.3%, came in at 0.2%. Even though the expectation was 0.1%, it was worse than the last report. And if you look at last year, it was much worse than the February 14th of 2012 report. It came in at 0.7%. So even though it was better than the expectations, and this can sort of throw people off when you get these numbers that are better than expectations, like, why in the world did the market go up? Well, it was worse than the last report last month. It was worse than the same report last year. So all in all, it really wasn't that great of a report. It just was better than the, mild expectation of 0.1%. Market pulled back. It decided to do a little rally right here. Did a little pullback, sort of filled in the, almost filled in the gap right here this morning. Did a little rally, started pushing back towards the gap, still hasn't quite filled it in. And but overall, just a flat day, not a whole lot happening on the day. Just up a little bit at the moment. Let's see right now. We are up a mere 1.25, so 5 whole ticks on the day. And let's see if we go over, we'll pull up the S&P. Check that out. We have had a couple nice moves on a couple other trades, but pound dollar obviously being the biggest mover of the day. Looking on over, what else do we have? Treasury Secretary nominee Lou, he's been talking this morning, testifying before the Senate committee in D.C., and they're drilling him on his stuff. He had this report coming out say, I have this plan that won't raise the deficit by a single penny, and they're like, this would add $13 trillion to the deficit. You are the absolute worst mathematician on the planet. We should not have you as a treasurer. And so we'll see how that goes. But I'm sure he'll get approved, unfortunately. And but anyway, so that's right there. And, they're going through, and I'm sure that's on C-SPAN, or if it may even be over by now. I'm not quite sure how long they're going to be drilling him for. But I'm sure that's just day one. And that's the Senate Finance Committee. Then we had our crude oil inventory reports. Didn't really see much at all. Let me flip on over here. I'll pull up oil. And came in lower than expected at 0.6 million, which does mean lower supply, which should mean higher price. However, the market didn't seem to think that way, and it decided to drop off the report and came on down. Basically just went back to yesterday's settlement. It didn't really do anything all that fantastic. It was worse than the last report. And it was, let's see, if I go way on back to, February of last year, then it was better than last year. So, but, on most accounts, it came in as a lower inventory report. And so that, we have about we're off right now around 25 cents from where it was at before the report came out. And but oil was flat on the day overall. So, all right, stay right there, folks. We'll be right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. Let's go ahead and go through. Like I said, there's not a whole lot going on today, so it's just a bit of a quiet day overall. But we got the Treasury Secretary thing wrapped up. We got the crude oil inventories. Business inventories was a little better than expected. Had little to no impact. We do have the 10-year bond auction. That came in at 2.05. So a little higher than expected on that. But a little higher at 2.05 versus 1.86 was the last number. And so those are ticking up. And it's basically the highest yield is the thing. So they may have this an auction, so they may have multiple interest rates. But the highest auction rate was 2.05 that was actually filled for the bonds. So watch out. Interest rates are rising. Preliminary GDP, that's coming out tonight on the yen. That will be a higher impact. It's a medium impact report labeled, but it will be a little higher impact. We'll have also going to the monetary policy statement and overnight call rate coming out tonight. It's not timed, but you may want to hop in and look at potential trades just on maybe dailies. So on the yen for tomorrow. And they'll have a press conference as well. We'll roll that in. We're going to have a bunch of euro numbers coming out tomorrow. So we should see some nice euro movement between 2:45, 4, and 5 a.m. There's 5 different reports coming out of Italy, France, Germany, the monthly bulletin from the ECB, and the flash GDP for Europe. So all of those combined should cause some decent volatility on euro tomorrow. Then we'll have the unemployment claims. unemployment again sort of taking a spotlight ever since it's been tied. It sort of died. That report almost became useless. Now, non-farm is, of course, much more impactful, but unemployment claims have become a little bit more in the spotlight now that the Fed has tied interest rates into the actual unemployment number. So that has increased its impact, and most noticeably, usually on gold. So then we'll have a couple other numbers coming out. Natural gas will be the other big number for the day there that you want to be paying attention to. Walking on over real quick, wrap it up with Friday. We're going to have retail sales, 4:30 a.m. on Friday on the pound. So it's a perfect time to check out a strangle over on the Nadex binaries. And if you don't have a Nadex account, definitely go check it out. And I'll show you how to get one here in just a second. Also, look at the preliminary University of Michigan Consumer Senate report. That's coming out at 9:55 a.m. That is a high-impact report. And so you'll want to be paying attention to it on any of the trades that you're doing. So what you want to do is go over to tfnn.com. Click on Nadex. Once you click on Nadex, then you can go to Our Products, click on Demo Account. You can sign up for a demo account and put in your username, first name, last name, phone number, and email address. Click Apply for Demo, and they'll get you hooked up and running right away. You'll literally get an email in a few seconds. You'll be able to sign in. To get a live account, it's only $100 to fund a live account. No day trading restrictions, no broker commissions. They have exchange fees like any other exchange, but you don't have to pay a broker because you're a direct member of the exchange. They are an exchange in Chicago. They're regulated, registered with the CFTC, having the same exchange classification as the CME. So anyways, a very cool, very awesome way to trade. I know on my last show on, Monday, I went through spreads a lot in detail, so make sure you go back and check out that archive if you missed it. And just click start, fill it in. It literally takes about 5 minutes to get funded, and you're all set up. And then check out our Diagnostic Box Spread Analyzer. So you go right there, you can get a 2-week free trial, and you can also get access to the daily deviation levels that I post, which are, insanely accurate day after day. It's not that they're always going to hit those levels, but I'm telling you, most days, more than not, they are perfect areas to tighten stops and also to target. So it makes life just a lot more accurate, a lot easier whenever you're trying to check them out, trying to figure out how to use them. So you'll get access to those as soon as you sign up. What will happen is you'll be able to log in, and you'll see right here in the members area, you'll actually be able to go in and look at the deviation levels for the day, and they'll load them up. And then you can draw those on your charts. You can use them however you want to. We even made a new feature down here at the bottom. You'll see we put a double click on any table cell, and you can just copy that. So if you want to go through and label those on charts, that makes it a little bit easier for you. And but that's a new feature we just added in there, along with if you're a futures trader, even if you're on Nadex trader, we've added in the Forex spot pairs right here. We've added in the future indices front and back month. We got future energies, we got metal futures, we have ag futures, Forex futures. So all of them laid out for you with the actual deviation levels that you can now take advantage of. So with that, let's go ahead and look at a few of the deviations and just start, scrolling through them, seeing where everything's sitting at. And I'll start off real quick just with, let's see. Oh, I gotta put that there. Right. And let me see here, right here. All right. So on this, we see that the S&P basically ran up to about half a deviation before falling on back down. And we'll cover some more when we get back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just checking things out right now. And let's see, going in and looking at a few different markets. Just trying to find the best setup here. But oil pretty flat on the day. And we'll see where it goes. But it's been really trading in a trading range. I'm actually checking out a butterfly right now. Where what I'm doing is I'm going in and buying the 97.35. Let's see here if I can redo that. 97.35. A little bit higher. There we go. And then I'm selling the 97.56. So right up here. And if it'll stay in this range for literally the next 30 minutes, then I'm able to basically make a 1-to-1 risk-reward ratio. So risking $50 to make $50 on the trade. And so pretty sweet layout. And I just put that trade on, got filled on that pretty quick, pretty easy. And but it's pretty simple to do what you're doing, and it's a little bit almost counterintuitive when you're looking at it. So let me show you this real quick, okay? If we look at this trade right here, if we buy this 97.36, okay, right here, what we're doing is we're saying that oil will be above 97.36 at 2 o'clock. That's 25 minutes from now, all right? If we sell this at 97.56, we're saying that oil will be below or equal to 97.56 at 2 o'clock. Again, 20 minutes from now. And it's making money right now, so it's going down in price. But, so what would happen on this, with the trades I was looking at, is we're going in and finding that, if I put, let's just raise this up to 75. So somebody took out the book. So 75 right there. And then we'll make this one just 25 just to make it simple. Okay. And what's happening on this one right here is it says max profit 25, max loss 75. And that seems huge. And also, here's a great thing. Notice how the book got taken out and they just refreshed it. So they're constantly putting more in there. So this is not your volume limitation. That's just the immediate quote at that price at that second. Okay. So max loss is 75. Max profit's 25. Well, that seems a bit nuts. Okay. Except for the fact that it can't expire both above 97.56 and below 97.36 at the exact same time. Right? So since it can't expire both above and below them at 2 o'clock, it has to either be in between them, above 1, or below 1. Well, if it's in between them, then we make $50. We make the total profit because it expired above 97.36 and below 97.56. Okay? But if it goes above it, all right, so it expires, higher than, then this one's going to lose $75, but this one's going to make $25. So your total loss would be 50. If it expires below it, this one's going to lose $75, but this one's going to make $25, making your total risk $50. Okay, so it's pretty sweet premium collection strategy. So you can go in there and literally just like that right there, and put the trade on, and very, very simple, very easy to do. So one of those things that I like the strategy a lot because it doesn't take just a whole lot of effort to put the trade on, and it's not a hard trade to do. So let's see here and update that one. There we go. But anyways, yeah, I just got another one filled right there. Put the exact same trade on again, and just adding to my position. But I bought this one at 36, sold this one at 74. So if it actually works out in my, sold at 74, bought at 36. So there's actually, or sold at 27. I'm sorry, I sold at 30. I bought it at 77. So that gives me about a $20, $50, almost a $50 risk reward ratio there. So it's a pretty cool layout, something that you can take advantage of, and as long as it stays in that range. So it is a range-bound trade, but it's one that takes a major advantage of premium. Okay, so again, it takes advantage of the premium in the market, and so you basically get to be, you can almost call it like an iron condor, but really, iron condors have to be equal strike all the way across. So this would be pretty close to equal, but the issue is since the binary already has a floor and a ceiling, it's sort of like a vertical in that instance. It's not the same thing at all, but you get that advantage. And so if you put the risk reward graph together on a chart, it's actually going to look like a butterfly, which is the best example. Because let's see here if I can find a good way to exhibit a risk reward graph for you using this. And so what I'll do is, you know what, I'm just going to do this. Take a picture right here, and then I'll bring this up, and then we'll zoom in on it, and then I'll draw the risk reward graph. Okay, so basically you have, your loss, all right, at this point, and then you have your loss over here at this point. That's if it expires above or below the price you're expecting, okay? And then in between, you're actually going to get the advantage of maximum profit. So it'll be like literally right here. Change the color on that one. Which means you make money as long as it stays inside the range. If it goes outside of it, your risk is capped. So, if we actually looked at this, sort of in a scenario of putting our price points on here, and we put, this one was, let's say, 97.36. If it'll let me type here. Make the type smaller. So 97.36. And make that a little bit larger for you. Because it's not the resolution there is not what I want it to be. One. That'll make it even harder. All right. There we go. 97.36. So that's where basically your loss point occurs on this one. Okay. And then right over here, you got 97.56. Okay. So 97.37. 37.66 to 97.56. Now, if it goes higher, all right, so if it goes higher than that, we don't lose any more money. Our risk is capped, okay? If it goes lower, we don't lose any more money. Again, our risk is capped. So that's what I mean by, similar to a butterfly setup, is you have this profit zone with a capped risk without the ability to lose anything outside of that zone. And that's basically what's going to happen, on this trade. Is we'll make profit so long as it stays in this zone. We won't lose anything more than $50 if it goes outside of it. So the most we can make is 50, the most we can lose is 50, and it turns out to be a pretty decent trade. And the ones to do this on, are things like gold, oil, silver. Also, you have all the FX pairs and the U.S. indices and some of the international indices. And this trade allows you to do, modifications to it as well. I mean, you can go in and, if it's not working out for you, you're getting nervous on it, you can close it out. So, but those are the main pairs that you can focus on right there. And again, it can go outside of the range until expiration. It just needs to expire inside the range. So if it does go outside the range, whatever. But if it expires inside the range, then you can make money. And you're just basically, it's a range-bound neutral premium collection strategy. And a little bit different one, a little bit newer one that you can take advantage of over there. And just like to open your mind and the ideas to new things. And I'm, making some new stuff, putting some new stuff up on this strategy right here. But I'm experimenting with it, having some fun with it. And it's pretty cool. So just a little bit, different way to do the binary trades, and it's one of the few premium collection strategies where you get a 1-to-1 risk-reward ratio. Because you go in and most premium collection, you can do it all day. You can make $10 over and over and over and over and over again. Of course, then you can lose $9 on the 10th day and wipe out the last 9 days' profits. So with this one, if you go in and you take advantage of lower volatility time frames of the day on those intraday strikes, so basically you could say theta's at its maximum. So burning that premium up for you. Then, just like I said, it's a different way to trade, but it's very, very, very cool. And I'm basically calling it like the Apex Iron Binary Butterfly strategy. So, and I'll put some more education up on it soon, where you can take advantage of it. But it's fun, it's easy, and it's multiple times a day on like 8, 9, 10, 11, 12, 13, 14, now 15 different products. You can easily do this strategy on. And let's see here. Let's see what else we got going on that we can take advantage of for the day. There's not a whole lot more. We don't have a whole lot more coming out tonight. So let's hop over and look at our deviation levels. And I'll throw that one, leave that one up there for you. And let me open up this. I'll open up one more chart here. So we can just sort of fly through the deviation levels real quick on the different markets. And let's do regular bars there. Add those back on. I'll keep that other one up since I got that on now. And we'll go on over here. And we'll add in, like I said, the deviations. All right. So, like I said, we got the S&P basically up to about half a deviation, then pulling back down. Scrolling on over, looking at the Nasdaq. That market right there, it went quite a bit further. Right off the settlement, it took off right after settlement, flew on up. Some earnings reports helping it out. Had a big pop up this morning to 0.7. And, if you're trading this, one of the things I like to do is I look at the 10-minute bars to help me with managing my, profit on the trades. I'm looking for the bars that break through the 10 deviation levels. And, if you get a big move like this, if it breaks 2 levels, you probably want to move it up to the next bar as well. But you would have tightened it up at least here, and again, further if you were even in that trade. So if you got in on the long this morning, great job. I know quite a few people who did that we're talking to over one of the chats. And so some cool stuff you can go in there and take advantage of. Let's check out the Russell, how it did this morning. And so on the Russell, it moved up, did not quite hit half a deviation on the day. And going a little bit further, we got, let's see, NASDAQ, Russell, Dow. So the Dow right here, basically just oscillating almost down half a deviation, up about 0.25. I mean, that is a half deviation move. It's a little more than a half deviation move. You take top to bottom. But didn't quite hit the half deviation mark. Just a really, slow, choppy day. Looking on over and checking out, we'll look at some currency pairs. Knock those out real quick. So we got euro dollar. It moved up 0.5, 0.7. And, pulled right back on down to settlement and literally just floating at settlement right now. So, I mean, talk about butterfly time, lunchtime, right? Look on over. We'll check out the pound dollar. So on pound dollar, we talked about that a little bit earlier. It just flew down perfect and just hanging out right at the 2 deviation level. Go on in and let's look at the Aussie dollar. And it did have a little bit of movement today. So right there on the Aussie, perfect 1 deviation move. Popped on up, went up there, pulled on back down to 0.7, back up to 1, back down to 0.7, hesitated a little bit, dropped to 0.5, pulled up to 0.7, came back up to 0.1, dropped back to 0.7, pulled up to 0.1. I mean, talk about swing trading, all right? And just great levels right there. So if you're a swing trader, trend trader, whatever kind of trader you are, these deviations can definitely help you out. And even a scalp trader. So great for that because, I mean, you basically can scalp right at the deviations. And looking on over at U.S. Canadian right here, we can see that moved on up to half deviation, pulled on back down to settlement, and went on back up to half, pulled on back down. So, we basically had some good movement on there, but nothing major, but at least you had the ability to, have a half deviation move on the U.S. CAD. And we'll look at the U.S. franc. On the U.S. franc right here, we're looking over and seeing a move up to settlement to 0.5 to 0.7. It actually touched the 1 before turning around and falling back down to negative 0.5. So touched the 1 before falling back down to negative 0.5. And let's see, wrap up a couple more pairs right here. Looking at the U.S. yen. And on the U.S. yen, we can see came on down, touched the 0.5, hesitated a little bit to hit the 0.7, popped on back up to settlement. But you can see how these levels really can come in very, very handy when you're doing these trades. And let's see, let's go a little bit further over. We'll check out a couple more pairs. And we'll look at the natural gas contract. So we had some good moves on it today. And went on up to 1.5. So nice 1 and then 1.5 stopped before hesitating coming back down. All right, we'll be back right after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. And just checking a few more things out, see what we got. It's like that log one there doing really well. The other one is struggling a little bit. So we'll see where they end up. But we got, let's see, pulling up natural gas. And now let's check out the metal markets. We have the gold contract right over here. And gold looks like it's going to settle in right around 0.5 deviations for the day right there. So it came down, moved half a deviation. And looking over at silver. Silver right now is also down half a deviation. So perfect half deviation move, almost half deviation up and half deviation down, which would be, if you look from the high to the low, that's going to equal a full deviation mark for you. And then pulling over and looking at copper. So on copper, looks like it is half a deviation up, half deviation down. So perfect full deviation, half plus half equals whole, right? So perfect half or full deviation move from top to bottom for you, right there on the copper markets. And ags, as we know, have been pretty quiet overall, but we did get a late night, early morning, I guess actually. Move on up to the half deviation before it pulled on back to negative half. Here's a perfect full deviation move on corn from top to bottom there. And then looking over at the soybean markets, Basically moved on down half on up to the half deviation move for the day. And, so pretty interesting move in soybeans right there. I mean, with that big jump up and then pull down. But all in all, right there, we've been getting those little bitty gaps right there on the market, depending on what hours you're pulling it up on. But a nice, decent move that you could have taken a good advantage of based on when the market opened up and just riding the deviations to trail your stops. And that pretty much wraps up our deviations for the day. We went through our fundamentals. We got our wrap up on a few technicals. We talked about a couple of strategies, such as the butterflies. The beautiful thing about the butterflies, again, they have a 1-to-1 risk reward ratio. So if you lose one and you win one, you're break even. Okay? And that's a nice thing, especially on a premium collection, because a lot of times markets will go or stay flat. And that's where you can benefit on those trades. So let's check out a couple more things, see if there's anything else. I'm not really seeing anything else just lining up perfectly right now for us to take advantage of here in the next few minutes. But I do appreciate y'all listening in, tuning into the show. And the last thing is on the news reports. I barely touched on this, but we had the preliminary University of Michigan Consumer Senate report at 9:55 on Friday. And then G20 meetings are going to start up this weekend. So that'll set things off for next week, which will become a bit more interesting of a week. So the G20 meetings, seeing what actually comes out of those. And then we're going to roll into some monetary policy things on the Aussie next week. We're going to have a couple minor reports on Tuesday. Wednesday is going to start building up with building permit and housing reports coming out, along with the FOMC meeting minutes next week. And so it's going to start heating up quite a bit. And more housing reports on Thursday, Spanish bonds, Philly Fed manufacturing, so core retail sales. So there's a lot of things coming out next week. We're going to have a lot more interesting news to be watching on. And, of course, we're coming up on that deadline of the fiscal cliff. And within here, about basically 2 weeks and counting. So we'll see where it all ends up when it's all said and done. And pull it together. So I hope y'all have a great day and have a good day of trading. And I will see you tomorrow on the show. Stay tuned. We have another great show coming up for you right after this.